Hello, business students. So today we're going to be talking about ownership structures, different types of formats or ways that you can own a business. There's really 8 different ways that I like to discuss and talk about in my class. So we're going to go ahead and get started with these. So the first one is going to be a limited partnership. This is where one person runs the company and another person provides the money for the company. They could be set up like a silent partner, that type of thing. In the industry that I was in previously, this type of limited partnership, I saw it quite often. I saw a lot of times where a person might have the idea or kind of the face of the business, the person that has the idea about how to run it, but they need financial backing and that type of thing. So that's what a limited partnership is going to be. A partnership, just a regular partnership, this is where the operation between 2 or more people who share management and profits. Now, the way that those profits are handed out or passed out, those could work a couple of different ways with both limited partnership and regular partnership. And the big difference between a partnership and limited would be in the regular partnership. Both these people share responsibilities in the way that they manage their company. Whereas a lot of times the limited partnership, the person that has the funds or the money backer, so to speak, that person is just more involved with handling the finances and being there to make sure that the company is staying stable. Third one is going to be sole proprietor, and this is when it's run and owned by an individual. So runs and owns the business by themselves. That's what a sole proprietor. You'll hear about sole proprietorships quite a bit in the workforce in the business world, and the reason is because a lot of times a person has an idea, and plus they may have the funds, or they've gotten investors to either loan them money, or they've borrowed money from a bank, that type of thing. My business, the way that my business structure was set up, was a sole proprietor. I was the only one that ran the operation. Now, I would occasionally partner with different people, different promotions to try to make a bigger and a stronger event, that type of thing. But the Iowa Challenge LLC, which I'll get into more in a second, that was actually set up as a sole proprietorship. So it's one person that runs the business, and that's it. Next one, number 4 on our list, is going to be a franchise. And a franchise is it's a person or people that pay the original owner to own a store that is already established. So a good example of this, our friends over at Hertz Donut, that would be an example of a franchise. I was fortunate enough to have Scott and Janelle come in and talk with my business class at the very beginning of the school year during first trimester, and they were just getting ready to launch Hertz. They were within a couple months of that, and so that kind of gave us a good chance to look at what a franchise would be. Domino's would be another one, Pizza Ranch, those would be examples of franchises. So if you ever notice, like when you go into certain stores, for example, those restaurants, eating establishments, if and when you go there, they look pretty much the same. And the reason is because the owners or the founders have brought in a specific set of guidelines and set up, and they've already done all of this stuff, and they just bring it in to the people that have bought into the franchise to make it into a franchise. So next one is a corporation, and this is a company or group of people authorized to act as a single entity. Corporation, you hear about these a lot with bigger businesses, and those are just going to be just that. They're larger companies that have a lot of people that may make decisions. They may even have a board of directors and that type of thing to help the owners and the people, the investors, make those decisions. A limited liability company, members are not personally responsible for the LLC's debts and lawsuits. It protects the personal assets of the owner from the business liability. So, limited liability company, this is what I turned my business into several years ago. So, a limited liability company could be an LLC, could be set up as a partnership, limited partnership, sole proprietor, any of those types of things. It's just basically telling us that you are separate from your company, from your business. So you have your personal belongings and those types of things, and then you have a divided line, and then you've got your business on the other side of it. Cooperative, join to enjoy these. So these are people that join to enjoy the benefits of group purchasing, pooled risk, and the empowerment of owning and controlling the company. I don't want to say that they just do it as a hobby or for fun, because in the end these people are trying to make a profit as well. But they have maybe a little bit of a different outlook or an alternative motive for their creation of their company and their business. So that'd be a cooperative. Last one today is going to be a nonprofit organization. These are going to be businesses that take donations to help out others. They have to have some revenue coming in, and that revenue, that money that they have coming in, is going to help with their the cost to operate their business. So just because they're labeled as a nonprofit organization doesn't mean that they don't have operating costs and expenses, and so they still have to pay those. But the majority of their money goes out to help out others, things like that. Just a little bit more about this. Sole proprietorship, the big thing that when I think about this, pros and cons, one of the pros, or some of the pros, would be that you get to choose your own schedule. You get to determine how things are run. You get to make ultimately the final decision, and you get to keep all of the profits. Now, the cons that go along with sole proprietorship, or a sole proprietor, they have more work. They have nobody to rely on. They've got nobody to blame when they make mistakes as well. And in the end, you're responsible for everything. It's you're going to have to come up with the ideas on your own, all of those things as well. Partnership, someone who works with you. The big thing with that is that you've got some help. You've got help people that are helping you along the way and that type of thing. Cons would be the disagreements. You're not always going to get along with your partner. And understanding that and figuring out how to make it work, that is going to be the key to making that company, that business decision work out for you. Corporation, business that has grown. The pros would be that you could sell stocks. When you sell stocks, you're trying to build up capital into your company for whatever reason that may be, whether it be to expand, that type of thing. And then you've got a board of directors, so people that will help you make decisions. Adidas was the company that we used as an example. It's a type of corporation. Next one is LLC. Big thing that you want to do with this LLC, like when I started mine, was I went and talked to an attorney who specialized in it, and I opened up a bank account in the company's name, and then I was able to get an employer identification number, so an EIN, and then also a tax ID, and paid sales tax for that company. Franchise, I already mentioned some of the things with that. Nonprofit organization, an example would be the Red Cross. So partnership, again, common goal, equal. In some cases, some partnerships are different from that. But anyways, that's kind of a brief description on what each one of these business structures are. Now for your assignment, the ownership structures in Canvas, you're going to create a Google Slides. You'll have 12 slides that you're going to create. That includes a cover, and it includes a reference slide. So you only have actually 10 that you're going to put together. Research what type. So basically what you're going to be doing is you're going to choose one of these. You can choose more than one of these if you'd like, but I want you to choose at least one of these business structures, and then I want you to talk about it. I have it set up in here where you're going to define the structure type. You're going to give examples of different companies. So if you go online and you look up Apple, you could see that they started out as a partnership. They worked into a larger company and that type of thing. So you could use some examples from that you find. The big things that I want you to look at with this are going to be the strengths and the weaknesses. I gave you some pros and cons, kind of explaining it. I want you to think a little bit more on what those could possibly be as well. Now the next part of this, I want you to think about what would work for you. Would you like to have one of these ownership structures? And then why? Talk about why it would work, why, maybe some of the problems that you might have. And then the last couple slides, is I want you to pick two of these and then compare them. How's a sole proprietor different from a partnership? And that type of thing. Look at franchise compared to nonprofit organization. Pick yours, the one specific one that you went through, and compare it with another. So, and again, if you have any questions, please don't hesitate to ask. But that pretty much summarizes the 8 different ownership structures that we're going to talk about. Thank you.